Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, January 23rd, 2026, and here is everything you need to know as the markets close for today. Indian equities ended on a sour note today, continuing their downward trajectory from earlier in the week. The Nifty 50 finished at 25,048.65, losing 241.25 points or 0.95%. Over on the BSE, the Sensex slipped 769.67 points, settling at 81,537.70 or a 0.94% decline. Bank Nifty faced even steeper losses, closing at 58,473.10, down 727 points or 1.23%. The broader indices didn't fare any better, with the Nifty Midcap 100 tumbling 1.8% and the Nifty Next 50 losing nearly 2%. The day's sentiment reflected a cautious, risk-off environment as investors booked profits and digested concerns about valuations and geopolitical uncertainties. The rupee weakened further during the session, touching 91.82 against the US dollar, the highest level this month, signaling continued pressure on the currency as foreign institutional investors remain net sellers of Indian equities. This rupee depreciation adds to concerns about imported inflation and raises input costs for several sectors. Turning to individual stock moves, today was all about winners and losers at the extreme ends. Adani Enterprises was the biggest casualty, plummeting 10.76% to close at 1,861 rupees 80 paise. This followed a bombshell from the US Securities and Exchange Commission, which filed for permission to personally email summons to billionaire Gautam Adani and group executive Sagar Adani regarding an alleged $265 million bribery scheme. The SEC's request to bypass Indian government channels and serve summons directly via email escalated the legal overhang significantly. Adani Ports and Special Economic Zone was another major drag, sliding 7.02%, while Adani Green Energy reported a stunning 99% collapse in quarterly profit, dragging the entire conglomerate lower. Group-related stocks including Ambuja Cements, Sankhi Industries, and NDTV also slumped between 3 to 6%. On the brighter side, defensive and selective buying emerged in quality names. Dr. Reddy's Laboratories gained 1.72%. ONGC climbed 0.86% on hopes of higher crude prices, and Tech Mahindra rallied 0.79%. Hindustan Unilever added 0.64%, while Hindalco rose 0.69%, benefiting from strength in base metals. In the mid and small cap space, National Aluminium Company surged 1.9%, while Bandhan Bank, despite a 52% profit collapse, rallied 4.31% on brokerage bullishness. Poonawalla FinCorp was among the worst in the small cap segment, tumbling 7.53%. On the technical front, Nifty 50 tested the 200-day exponential moving average near 25,100 but held support during the session. The immediate support zone for the index sits between 25,000 and 25,200, while resistance is clustered around 25,400 to 25,500. Breaking below 25,100 could accelerate declines toward the 24,900 to 25,000 zone. Bank Nifty faced stiff selling pressure, breaching the 59,000 psychological level and touching an intraday low of 58,400. The banking index is critical to watch, as a break below the 58,700 to 59,000 support zone could signal deeper losses toward 58,500. Sectoral weakness was pervasive today. The energy index was the hardest hit. The realty sector also suffered severely, with Nifty Realty Index collapsing over 3%, bringing its year-to-date decline to nearly 12%. This marked the third worst January start for the sector in the past decade. Stocks like DLF, Godrej Properties, Lodha Developers, and Oberoi Realty were particularly beaten down, with many near 52-week lows due to weak pre-sales and affordability concerns. Capital markets and defense indices also declined sharply, falling 1.75% and 2.67% respectively. Auto and pharma indices retreated approximately 1% each. Interestingly, only 1 out of 38 sectors managed to close in positive territory today. The BSE Consumer Durables Index edged up 0.26%, highlighting how broad-based and indiscriminate the selling pressure was across the market. On the macroeconomic and policy front, the calendar was relatively quiet, but market participants remain focused on the US Federal Reserve's upcoming policy decision next week, which could influence rupee and global liquidity flows. Crude oil prices have continued their downward pressure, with WTI sliding below $60 per barrel on oversupply concerns and falling demand expectations. Market breadth deteriorated significantly, with 3,126 stocks declining against just 1,477 advancing, reflecting widespread pessimism. FII selling has continued to weigh on sentiment, though domestic institutional investors remain committed with net buying support. On the commodity front, precious metals rallied sharply as safe haven flows dominated. MCX Gold February futures hit a fresh record high, near 1,59,226 rupees per 10 grams, gaining nearly 2% or 2,885 rupees during today's session. Silver outperformed dramatically, surging to a lifetime high of 3,39,927 rupees per kilogram, jumping nearly 4% or 12,600 rupees. This precious metals rally reflects geopolitical uncertainty and a weaker US dollar, making gold and silver attractive hedges for investors. International gold also touched record levels near $4,969 per troy ounce. Crude oil, on the other hand, continued its weakness, trading around $60.37 per barrel, down significantly from prior peaks, as oversupply concerns persist. Geopolitically, markets remain sensitive to news flow, though the session saw some easing of tensions compared to earlier in the week. Peace talk signal from Eastern European regions provided some relief, but the ongoing fiscal and tariff uncertainties in the US continued to cast a shadow over global risk appetite and support haven asset demand. Looking ahead to the next trading day, the technical setup suggests a defensive posture is warranted. Nifty 50 needs to hold above the 25,100 level to prevent a further breakdown. If support holds and buying emerges, the index could retest 25,300 to 25,400 resistance, potentially leading to a push toward 25,500 to 600 range. However, a decisive break below 25,000 suggests a slide toward 24,900 to 25,000 support. Bank Nifty, which is more vulnerable, needs to stabilize above 58,700 to avoid acceleration toward 58,500. Traders should watch the opening closely, as the direction set in the first hour often dictates the broader tone for the session. From a trading perspective, today's action offers a clear lesson. Profit-taking and risk-off sentiment dominate when macro uncertainty looms. The Adani-driven selling shows how concentrated bets can amplify volatility, while defensive and quality stock strength indicates selective buying in large-cap names. My actionable takeaway is this: avoid chasing the energy and realty sell-offs at these depressed levels. Wait for stabilization signals before adding positions. Instead, accumulate quality large caps like Dr. Reddy's, Tech Mahindra, and ONGC on dips, as they've shown relative resilience. Watch the rupee closely. If it weakens further toward 92, it could trigger additional FII selling and pressure the broader market. Happy Republic Day in advance. It's a long weekend break. Take a break. The next trading session resumes on Tuesday, January 27th. Until then, stay cautious and keep your stops tight. Send in your market questions and observations. We'd love to hear what caught your eye today. Join us tomorrow for our morning market wrap and stay tuned. This has been What Moved the Market. I'm Prem. See you at the closing bell. Have a great evening.